Cyber insurance, 2023. So this is sort of an aerial view of where we sit from the beginning of 23 moving forward, at least in this year. The last few years have been extremely destable, chaotic. I've had more difficult conversations than I've ever had in my career because of the increases in pricing, the restrictive language and limits. It's been a completely different ballgame the past few years. Good news is we are seeing some stabilization on the premium front, which again, we'll get into these a little more granularly, but this is just an aerial view. Risk environment. So items that underwriters are worried about right now, and they're worried about the proliferation of those items moving forward. Catastrophic risk, otherwise known as systemic risk in the cyber insurance world. A good platitude for that, which again, we'll get into more granularly, but why go after one company's data when you can go after a particular company's data that holds 1,000 companies' data? Dynamic privacy regulations, which again, why I was so entranced, whatever word you want to use prior, changing all the time, globally super fragmented, which the US, the infograph you used was a great example of that. The continued threat of ransomware, we'll get into some of the statistics on that, where it was, where it is, where it's heading. Client preparation. So this has changed over the past several years. It looks a lot different now in 2023 than it did in 2018. 2018, 2019, when we were brokering cyber insurance deals for our clients, I was speaking to, if they had a director of risk management, they were big enough to have one of those, speaking to them almost exclusively. If they were large enough to have a CFO, small enough to not have a director of risk, chatting with the CFO exclusively, and then CEO if he was running the show on that. That has changed dramatically. And a great example of that is I have a higher ed client that we have a meeting in a couple days to get geared up sort of for their renewal. 3 years ago, it was the director of risk management and our cyber team getting in the weeds. Now there's 9 people from that higher ed entity on the call. The CIO, the CISO, the CTO, their teams. It's a lot. And that's par for the course now. We see CISOs, CIOs very, very in the weeds because now we're sort of seeing that cyber insurance premiums is a direct reflection of the cybersecurity apparatus and infrastructure that they've put in place. Newer markets. There's the legacy markets that have been here for a long time, even in the cyber insurance space. But we're seeing some new entries. Corvus, Cowbell, Coalition, AtBay, Resilience. We have all these new sort of cybersecurity first cyber insurance. I don't want to call them carriers because right now they're MGAs. And the difference being when let's use Cowbell for an example, would like to become a carrier, they typically start as an MGA, meaning they obtain an agreement with an already solidified, established carrier saying, this is the analytics we're going to use. We think we can make this profitable for you. Give me the pen and I can underwrite this myself under our name. They do that for a while. If it's profitable, typically they try to branch off and become a carrier in their own right. The reason they don't do that at first is because the regulatory environment of becoming an insurance carrier is a complete nightmare, as you can imagine. So looking forward, stabilization, that's the key phrase here. What I will say in terms of that stabilization is that as we're speaking right now, it is moving towards stabilization. Something can happen tomorrow, a new threat vector, a new bad actor that could change this dramatically that we saw 2 or 3 years ago. So where we sit now, things are stabilizing on the price front. So 2 years ago, all of this was red. It was a complete mess. Now we have a bit of yellow in the claims and rates. We're seeing relief on the rates, relief in pricing a bit. So you can see the January cyber premiums, average increase for the same limits is about 11%, which frankly, on some other lines is a large increase. But when the average increase was 120% 2 years ago, this is pretty welcomed. So cyber insurance renewals aren't really keeping people up at night the way they did 2 years ago. Also read an interesting stat that anybody with a C by their name, so the C-suite, the person that has not been getting the most sleep or is really not getting any is the CISOs. So buy them a coffee if your firm has one. Structure and coverage, this is where they're sort of making up the difference with the price relief. Coverage, they're restricting coverage on a few things, which we'll get into. Structure, they're cutting back on limits. Say a firm is buying 10 million. A carrier now might say, we'd like to only give 5. Or we'd like to increase the deductible or retention. from 5,000 to 25,000 or from 100,000 to a million. Underwriting is becoming super tough. And there's 12 controls that are really the keys to the kingdom, even just to get cyber insurance, which we'll get into a few of those. But a few years ago, the cyber insurance market was extremely profitable. You didn't need all these controls. You needed some for the sake of pricing. But now, a couple of years ago and now, this is really the first time that I've had to have conversations with clients that if you don't have all 12, there's a chance you won't be able to procure cyber insurance this year, which is a massive shift from the past 10, 20, 30 years of cyber insurance. So how did we get here in 2023? So as mentioned, 2015 to 2018, a soft cyber market, very profitable for the carriers, not a lot of claims. And if they were small. So not these catastrophic, massive $1 million claims, maybe a few small ones here and there. It was a good deal for the carriers. We had carriers that didn't necessarily sort of swim in that space, even become interested. And they were providing capacity, providing limits, trying to get into the space because it was a profitable line of coverage for them. That's good. All right, 2019, something happened, I'd say. Massively. So a massive macroeconomic digital transformation that we have never seen in the history of the world, right? In almost a month, 40, 50, 60, 70, 80% of the economy went digital. Work from home, some analog mechanisms moved to digital. All this happened in a very short time frame, which caused a lot of problems because the timeline for that type of massive digital transformation probably should have been 5, 10, 15 years. It was truncated to a month or two. That's a problem. The attack surfaces increased exponentially. And what we're seeing now is the lack of cybersecurity talent is a massive, massive issue because the cybersecurity talent was going up linearly with sort of how the digital transformation was occurring in the economy, linearly. And then this exponential shift happened. We don't have the talent. And that's an ongoing problem in the economy, and it's an ongoing problem in the cyber insurance space. Cyber insurance carriers, cyber insurance brokerages, cyber insurance claims people, we have a lack of talent as well in this space that we're struggling to remedy. So due to all of those things, 2021, we start to see a massive shift. Ransomware becomes sort of this household phrase. Everybody heard of that briefly? Anyone? Some, I'd imagine. Yeah. Malicious software, hacker gets in, I have your data, pay me, or I won't give it back. I won't decrypt it. And that's sort of how it started. And then it turned into, I have your data, pay me a lot more, or I'll disseminate it on the black market, sensitive information. So that was the massive driver. Ooh, that was loud. For claims moving into 2021. And of course, the other claims, the fraudulent wire transfers, data breaches, things like that, were still there. But the ransomware was really the high ticket item. And a lot of the threat actors saw that, and they started to blanket the market. So 2022, companies are getting a hold on the ransomware thing. They're building out their cybersecurity infrastructure, often because they needed to obtain cyber insurance in the first place. Insurance continued to evolve underwriting to focus on security controls. Again, we'll get into these, but systemic risk is still a large thing that the market is trying to figure out how to model comprehensively. And we'll get into that a bit. But if a breach happens with a very large aggregator of information, what does that mean exactly? Who's on the hook for that? Every company that resided in there, the information? Is it the company up top that was holding the information? Is there some split? What does that look like? So trying to model that is extremely difficult. And to sort of improve upon that, the lawyers at these carriers are trying to change the language in the contracts to protect themselves. Because reserving for that type of event, that's going to make premium costs even higher. And we saw this sort of different conversation when the pandemic hit, where should insurers be on the hook for business interruption losses, right? And in our world, it's non-damage, so it's not a property loss, but there was people in DC saying, that should cover it. there's a conversation to be had there, but the issue at that moment in time was the carriers didn't reserve for that because they weren't intending on covering that per the language of the contract. So it would have put them all out of business, essentially, overnight. And that's what we're trying to figure out in the cyberspace, too, with the systemic risk. How do we do this in a way that allows cyber markets to be profitable, to put their best foot forward, but allow the premiums to be such that it's affordable, right? So this is a graph of two things. The first is, usually this is the interest level of my presentations over time. Thank you. I thought that was pretty good. And it's the cyber insurance market increases from January 22 to January 23. So the average increase was 120% about a year ago. They were just underwritten in a way that didn't enable them to be profitable long term. But then this massive digital transformation happened. Things changed very quickly and abruptly when the carriers started to see red in their financial reports. And again, one of the good things was these.
Are you saying that the cost should start to come down?
Define down from the increases are decelerating. It's
That's
not,
just the increase.
yes.
Just the increase.
It's not getting cheaper. It's getting less expensive.
All right. I just wanted to be clear.
You know what I mean? Yeah. Yes. But if this trajectory continues, the goal for the cyber carriers is to get to a place where that's zero. It's stable because in their eyes, 11, 12%, that causes a lot of friction, precariousness with them competing with other carriers. The goal is to get this in a more stable environment, and it's getting there. It was not stable a year ago. Again, it was the first time in my entire career where I'd have conversations that you cannot obtain cyber insurance unless you put forth particular controls in place. That's never been a conversation I've had before. I've had the conversation, your premiums are going to be higher if you don't implement certain aspects, but I've never had the conversation, you cannot obtain it anymore unless you put these sort of mechanisms in place. I'm not going to get into all of these, but I did want to mention sort of some of the things that I can cover. And there is one aspect that I find interesting, but prior to getting into that. So business interruption and lost revenue. Someone takes down the system. You can't do business the way you're accustomed to. You start to lose revenues because of that. Cyber insurance can cover that. Cyber extortion, ransomware can cover that. But the interesting thing about a cyber insurance contract is, for example, forensic services, incident preparation and response support. It's a service contract too. So built in that are services that they provide you, third-party services that they have relationships with that you can bring to bear to help with your own cybersecurity. And that's not benevolence on their part. They want you to be safe, so their bottom line isn't harmed. And then this was hit on at the keynote, the regulatory defense and penalties, which is going to continue to be an evolving thing moving forward here. So the three particular areas that underwriters, carriers, brokerages are all worried about right now. First being catastrophic risk, Log4j and SolarWinds being examples of those. And we'll get into that a little bit. Geopolitical tensions. There's some things going on in the world. And in that area of the world, even before those particular things were going on, they were a hotbed for hacking. So that's going to only continue to be augmented as time moves forward. Privacy regulations, kind of stole my thunder over there in the keynote. The GDPR, California, Colorado are sort of GDPR lights, pixel tracking. They're all worried about these things because they continue to change all the time. And that map that he showed and conveyed is a great testament to that. It's all changing. Two are in place. A lot of others, they're trying to wrap their head around it and put things in place. Others, they're changing things that are already in place. So it's an ongoing discussion. And then ransomware evolution continues to be a thing. It's not as bad as it was 1 or 2 years ago. The claims we're seeing are less. But it's still an ongoing thing. So Log4j, who's familiar? Yeah. Log4 shells a vulnerability, right? Log4j, in essence, is an extremely obscure, but rather ubiquitous piece of software that logs things that happen on a computer. It logs events, in essence. And hundreds of thousands, millions of computers are impacted by this. Well, hackers found a way to maliciously inject code into it, that impacted a lot of computers. That would be a systemic risk, right? They go after this particular thing, they impact everyone involved in that, or try to. So why hack one business when you can reach thousands? SolarWinds was another large issue. That was more of a supply chain attack. That hit the federal government too. In the next year, there's going to be another. And we haven't seen one really pop like these could. So this is Marsh McLennan with our cyber consultants and our cyber brokerage, put together a massive study to show what would the claim look like if, for example, a long-lasting outage at a leading cloud service provider. So a single point of failure claim could be $14 billion. Large-scale cloud ransomware, $11.5 billion. In my view, I think that should be higher than the first one, but data loss from cloud service provider, $22 billion. So we're talking about billions and billions of dollars. Limits vary from 1 million to, take the Fortune 100 out to 100 million. There's a big gap there. And these numbers are almost difficult to comprehend. They're so big. It's sort of difficult to comprehend, like someone saying LeBron James is better than Michael Jordan at basketball. Oh, jeez. So this is what we're trying to figure out on a large scale. This is one of the three things that carriers are trying to figure out. How do we ensure this in a way that premiums are still affordable, but we can stay in business if one of these happen? So the global regulatory environment, again, mentioned prior, United States extremely fragmented. Each state really is going at this in their own way. Colorado and California are sort of at the forefront of that. New York is going to be at the forefront of that. A lot of other states are trying to figure this out. But, notification timelines, what you have to do when a breach occurs, those all vary. The fines associated, compliance issues, regulations, they all vary state by state. And that's a microcosm of the global economy, aside from GDPR, which is an omnibus. That's pretty comprehensive for that area of the world. A lot of countries are doing this on their own. And the notification timeline, the regulatory sort of compliance stuff, the fines are all different, and they keep changing all the time. So how this is going to look moving forward, it's very difficult to underwrite. A big date in the insurance world is January 1st, because that is when reinsurance treaties typically are put in place. So insurance carriers buy insurance on what they're insuring from reinsurers. And they have a lot of say, the reinsurers, on what underwriting looks like, what lines of coverage they go after, what industries they're comfortable with. So let's say the reinsurance treaties come in place and they're for the year, and we have a massive omnibus bill in the United States that changes regulations precipitously and on a massive scale in April. Well, now the underwriting is in a bad spot for 8 or 9 months. How do you do that? Insurance isn't known for being super flexible. Now they're trying to inject flexibility within that structure because of situations like this. Because like I said, the cybersecurity state of affairs today could be vastly different tomorrow, depending on a billion different reasons. So this is all something that they're trying to grapple with. And property insurance, liability insurance, those things have been around for over 100 years. When I was in London, we went over to Lloyd's of London, which is sort of the mecca of where insurance started. And you can read about how Lloyd's insured the Titanic and what that looked like. Well, they weren't insuring the cyber insurance on the Titanic. It's a new thing. We're still trying to figure out how to stay in the black, how to make money on this, but allowing the economy to flourish still. Good news, bad news. Ransomware. Massive spike in 2021. That dropped dramatically in 22. And we're estimating it's going to be about the same in 23, hopefully. That's good news.
I've heard, I don't know, do you have any thoughts about contributing to the decrease? What could be,
Yeah.
what could be the cause? I've heard things like, the war in Ukraine, because otherwise
So a few things. There's probably some truth to that, like you said. Probably, the truth's typically somewhere in the middle. And like I said, that region, that's a hotbed for hackers and threat actors. But a few things have changed. First is a lot of companies have stopped paying it because they've realized from past experience or from their counterparts that even when they do pay it, somehow or sometimes that data ends up on the black market anyway. So they just paid $30 million and now they have all these fines. And what did they pay that $30 million for? So we're seeing that happen a lot more. Another thing is, so right here, those are getting closer. So the amount of ransomware has gone down, but the success of those ransomware attacks are kind of going hand in hand now. So they're being a lot more methodical with how they try to put forth ransomware attacks. Before they were just blanketing the economy. Hopefully someone presses a link. Now they're super strategic, and I'll go into a couple examples of why that occurred. Is that helpful a bit? Yeah. Any other questions on that?
Yeah, follow.
Yep.
So with the new regulations that are going to be coming out, do you see insurance companies perhaps stopping negotiations with threat actors, or even saying no, we won't pay ransomware because it's illegal in the United States?
I've heard that argument a lot from the cybersecurity world that maybe it should be illegal, and that would stop them in their tracks pretty quickly. I would say that's an ongoing conversation. It's a very delicate conversation for cyber carriers because a lot of companies, that's their primary concern is ransomware. They buy cyber insurance for the ransomware cover. If you strip that out, they might not buy it anymore. Not saying they shouldn't, but they might not, which could impact the carrier's bottom line as well. So it's a super delicate conversation through that lens.
Well, there's significant costs even without paying ransomware.
Oh, massive cost. Correct. Yeah. So some recent attacks here. First one's the federal government of a country in the world. Second one's an insurance company. Guess what line of coverage they have that they're pretty good at, really good at?
They're not following all those mandates.
I was brokering deals when that transpired, and things were going on over a phone call. Can I get this? Can I get that? Because it was down for a while. Police department. Hackers somewhere overseas got a hold of an informant list, witness protection list. Started with an initial amount, figured out what they had, and said, actually, we want this. Give you about 3 days. If we don't get it, we're going to give this whole list to all the gangs in the community. And the people on that informant list are going to have a pretty big problem. And these are not sort of these catastrophic, this isn't intended to sort of instill fright, right? These are standard claims. There's been much larger claims too. These are not the biggest claims that have ever happened. Actually, I have a couple more stories on ransomware, but sort of conveying the sophistication. One of which is several years ago, a relationship of mine was running a company, and a hacker for about 2 weeks was sending emails, sort of Expedia-like emails, to everyone in their company, hundreds of employees. Hey, vacation getaways, nonsense. Did that for 2 weeks. Day 15, same exact email, but they changed it to click here to unsubscribe. So they're getting more sophisticated.
I said, I appreciate you saying that. A long thought. Unsubscribe is like a bad idea.
Yep.
Because you're clicking on something that you don't necessarily know what it is. So I appreciate the valid.
100%. Yes, 100%. And I spoke at an HR conference a couple of weeks ago, and it was tailored to HR departments. And one of the ransomware sort of structures or teams in the world, threat actors, put forth something called GoldenEye. And what they would do is they would submit applications to HR departments, and when the HR departments click the resume, enable macros, yes, ransomware. But they were super nice, the ransomware folks. They gave you this nice sort of picture. I mean, the yellow skull wasn't super nice, but they said, hey, if you're having issues with your crypto wallet, give us a ring. You can call us 1-800. We'll walk you through it. And this is a real thing. And people would answer, hey, this is GoldenEye. What can I do for you? Oh, no worries. We'll help you out with the crypto wallet and walk you through it. And that'll be $30 million for our help. Thank you very much. So again, an ongoing threat, stabilizing a bit, not like 21 and 22, but I keep saying it, today might be different than what it's going to look like in a week, a year, 2 years. Pretty safe to say at this point, you can't get cyber insurance cover unless you have all these now, at this point, where we sit. And we're getting a lot of calls from clients. I obviously know a decent amount of people in the cybersecurity space who have their clients. And clients are calling them saying, we need this of the 12, this of the 12. Can you help us? Can you help us? So obviously, Marsh and other similar brokerages do our best to have ingratiate ourselves with the cybersecurity firms so we can assist in finding the right partner for them. Go ahead.
These are the 12 you said on the must-have.
I would say these are the keys of the kingdom to even get a quote for cyber insurance in 22, 23.
We have ISO 27001 that you're audited on every year. Is that sufficient to say, obviously these 12 are all important to that to be able to say we have these?
Oh, man.
Does that help and affect our premium? Because it's got a 14% increase on it. I don't know if that's better than about the 11% you said.
Let's chat about it later.
Right.
Yeah, come find me later. We can chat about that. And I'd say the one that is becoming more important that we're seeing sort of a cybersecurity sub-industry pop up is the vendor digital supply chain risk management. Someone mentioned Target in there in one of the attacks.
Do you include vendor due diligence?
Yes. Yeah, absolutely. And again, there's some companies that'll do that vendor due diligence sort of for you, right? Which I would put sort of them in there as well. But the Target one's a great example, right? They got in through an HVAC guy. They knew going after Target, they're going to have pretty good controls in place. They went after the small local HVAC guy with 4 employees. Doesn't buy cyber insurance, whatever. So again, the last few years have been chaotic, sort of pandemonium, if you will. And we've seen massive changes. So the improved cyber hygiene, those 12 controls, that's to start to even get quotes in cyber insurance. And again, there's always anomalies and things like that. I'm speaking in general terms. Risk engineering, predictive modeling, carriers and insurtechs are spending a ton of money on trying to figure out how to model these systemic risks, catastrophic risks, trying to benchmark potential ransomware scenarios that they've always done. They've always done these things, but on the scale now, it's just vastly different than it was 2 or 3 years ago. Active government regulation, kind of went into that, and then private-public partnerships, which I'll get into in a second here. But I think the arrow being flat, more flat, I don't know if that's correct, because again, things keep changing in the cyber insurance space drastically. All it would take, if a systemic catastrophic claim happened and somehow was decided through the inevitable lawsuits that occurred when that happened, that one carrier was on the hook for that, and it was a big one, they're pretty close to being out of business. That could change the entire landscape of cyber insurance overnight. The contractual language of those cyber insurance policies would look vastly different the next day. So the future, a few things to consider. Again, evolving terms and conditions. That's going to be a continuous thing now moving forward in perpetuity as things continue to evolve. For example, AI and the conversation over there. The insurance implications of that could be a 3-hour presentation of itself that truthfully folks at Marsh are trying to figure out. Right? We're trying to work with carriers on how do we insure some of this stuff that's never been insured or had to have been insured before. Cyber parametric is something interesting that we're starting to see pop up here and there. Parametric's a super niche thing. Anyone familiar with that? Okay. You want a job at Marsh? Yeah. Oh, gosh. Typically, we see a lot in the property space, and I think providing a property example will help probably that into the cyber aspect of that. It's also known as index insurance. So say you're in Florida, or I guess here too, Louisiana, hurricane comes through. You can buy insurance on, say you have a high rise and you want to purchase sort of supplemental coverage. You can go to a parametric insurance carrier and say, I want X amount of dollars and I'll give you X amount of premium. If winds get to X amount, then I want to pay out within 30 days. Has nothing to do with damage, has nothing to do with any of that. If the winds get to this speed and we all can confirm and agree upon that, here's my premium I want to pay out. So we're seeing cyber parametric pop up, and really we'll see what it turns into, I guess. But for now, we're seeing, for example, a couple carriers try to dabble in how much malicious activity is being targeted at a particular company. And they've created a dashboard, and they can essentially see how much malicious activity is going after a particular company at any given time. If it exceeds X amount, you'll get a payout. Doesn't matter if they breached it, doesn't matter what happens, you can get a payout. And in the property space, we'll see it in cyber too. A lot of it is to supplement very large deductibles. If you have a $500,000 deductible, the carrier's not comfortable giving any less on that deductible. How do we supplement that? I don't have to pay $500,000 out of pocket, right? Parametric could help with that. Cyber backstop. 9/11, we got a backstop for terrorism, TRIA, that the federal government sort of supplements. So if a terrorist attack does occur, because in most insurance policies, war is excluded, terrorist attacks are excluded, the federal government can step in, provide funds. There's now talks on PREA, a pandemic sort of backstop. That's been discussed now and still being discussed, truthfully. And now we're seeing legitimate discussions on a cyber backstop to prevent the systemic risk. So if a $30 billion claim happens, can the federal government step in some capacity to cushion that blow, that fall to the carriers, to the organizations, to the brokers, to the companies, to everyone? And I think this is going to be critical, the continued emergence of insurtechs.
Going back to the federal backstop, that was thinking more like a pipeline attack where the federal government actually did something that
Honestly, that's a perfect example because it's infrastructure. That's one of the critical things that they would be wanting to cover.
because everybody else that was impacted by our side got benefit too because they magically went away.
Right. And well, and the one thing on a backstop would be, for example, TRIA, if you purchase it, you're paying something for it, a small amount, and it's subsidized, but it's going into a pool that the federal government is sort of a part of, for lack of a better term, and they can distribute those funds accordingly if a terrorist attack happens on a large scale. So cyber federal backstop, but I'm not the president, let me preface all this with that, but would feasibly be the same thing, right? You would pay X amount for cover. It would go into a pool, this large pool, not necessarily run by the federal government, but they would be involved in it. And if something systemic happened, infrastructure in particular is a critical, that's something we're trying to figure out on a large scale. That it can cover that, cushion that blow. And this may be intriguing to some of the cybersecurity folks here. So more entrenched cybersecurity, insurance carrier, broker relationships. I bet Marsh has increased our cybersecurity relationships tenfold in the past few years. Trying to help our clients sort of quantify their risks, right? How much cyber risk do you have? What does a black swan catastrophic event look like? How can we help figure out what the limits need to be? A lot of the people in the cybersecurity world can help with that, can assist with that. So we're really trying to engage partners in that space for that reason. And then carriers obviously are too. Trying to do sort of external scanning, figure out what does it look like from the outside? What does a hacker see? Are they going to go after this? Are they going to be able to get in? So those three that amalgam is going to continue to be very pronounced moving forward. And I know I'm super short on time. Questions? Anyone? Okay. Anything that comes up, in the breaks, feel free to run me down. Happy to chat about it. Again, super thrilled to be a part of this. And you guys all must be a glutton for punishment or lost a bet or something to come into the insurance one. So I appreciate you finding value in this enough to come listen to me jabber for 30, 45 minutes. So thanks so much, and looking forward to chatting with you guys later. Like quota share? More often now. The percentage, I'm not sure, but the capacity is going to continue to be an issue. So when you get larger companies that need large insurance towers with 4, 5, 6, 7, 8 carriers, they often don't want to take a huge bite of that. They want to share it with other people. And we're seeing that with all lines, to be honest. The insurance market as a whole has been in disarray for a bit. So what you're describing is something certainly in cyber insurance are going to continue to be, and will be moving forward. But really insurance as a whole, we're seeing that become more pronounced as towers are built for larger companies. Yeah. So there's a few things to that. One interesting thing, you're going to get me going here. Yes, for several reasons. One drawback that, not necessarily a drawback, but caveat, is that, as I mentioned, cyber policies are service contracts. So you won't get all of those services embedded if you use a captive. That said, if you're a very large company and your contracts mandate you have $50 million in coverage, the market capacity only affords you 10 to 20, 20 to 30, 40 to 50. There's a gap. You could throw a captive for that 10 million. We're getting super in depth here, but yes, you can do that. And we have seen that frequently. Yeah. Yeah. Difficult is a great way to phrase that. Yeah. Yeah.
You gave an interesting example of the parametric with the highway. I've never heard of that.
Mhm.
What might that look like as a cyber parametric? Just for instance.
Really, there's a couple that are out there, and I can't get super granular, but like I said, what they've created is a real-time dashboard that shows malicious activity targeted towards their companies that they've created this parametric partnership with. And once whatever that metric is in terms of malicious activity targeted, if it exceeds X amount for X amount of time, then a payout happens. It doesn't matter if they breached it or not. Yep, it's a great way, and we're seeing more of that in a lot of lines of coverage. Yeah, yeah. Yeah, and again, it's a lot of it's going to depend on these next several years and how profitable those carriers are, and it's going to continue to need some tweaking here and there to become profitable. So things like that could make them more profitable. And I think cyber insurance, a lot of the limits, I think some things could start to be sublimited, for example, right? So you get $5 million for everything, but on this particular issue, we're going to give you $100,000 sublimit, and that's it. So that it's going to be an ongoing thing trying to figure out how to do that. And it's such a new thing, cyber, right? On this scale, I would say that cyber insurance now, 10 more seconds, is a different product entirely than it was 5 years ago because of just the environment we're in. And it may be a different product in 5 years from now, right? So, all right. Thanks so much.